Warnings for the Australian economy. Let's have a look. Good morning everyone, I'm Florian Heise and welcome to an episode of Heise Says. I've got my morning stein of coffee and today it is a stein of bullet coffee. Thumbs up from all the keto friends. And I thought we would have a look at this article. Now this is discussing some comments from Dr El-Erian, and he is a very influential investor. And he makes mention of some concerns for the Australian economy. So let's have a look through this article. Now, one of the world's most influential investors says a crash is coming and central banks are impotent to protect against it. He also has significant concerns about Australia's future. Well, guys, who do you trust? Who do you trust? The real estate spruiker we were debunking yesterday, or this gentleman? When Dr. Dr El-Erian speaks, Wall Street listens. While Chief Investment Officer of the fabled global trading powerhouse, PIMCO, he grew it from managing US $1 trillion of funds to US $2 trillion of funds. He's now Chief Economic Advisor at global financial giant Allianz, which bought out PIMCO and has an estimated personal fortune of $2.4 billion. So he's probably got more money than he needs to worry about now. Dr. El-Erian has recommended people take a look at their investments and undertake some regret minimization. Ask yourself, what mistake can I not afford to make? Well, I mean, fundamentally, this is a very good point with any investments that you make. You need to only be able to risk what you can lose. It's that simple. If your investment suddenly disappeared like that, you need to be able to just calmly accept it and keep going. Write off the loss and move on. That's something that a lot of people in businesses learn. And it's something that when you hear about people putting all their money into going all in on something or going into a crypto thing, it's concerning. It's concerning. So if you're investing in the most illiquid, high-risk parts of the marketplace where companies are highly indebted and require continuous refinancing from that marketplace, I would be really careful because there you can get a default, and that is a mistake that cannot be reversed. Lose-lose-lose situation for central banks. Speaking exclusively to the ABCs of the business from his hometown in Southern California, Dr. El-Erian voiced concerns that ultra-low interest rates around the world were doing more harm than good. Beyond a certain point, it starts distorting all sorts of behavior, and it is inconsistent with a well-functioning economy and markets, he said. Well, we're seeing that with negative interest rates. It's just crazy, some of the stuff that's going on. It really is. It doesn't make any sense fundamentally, and he's right, it is distorting the markets. So I very much worry. I think in the case of Europe, for example, we've already reached that point. Central banks, he said, are in a lose-lose-lose situation. They can't do more because that is becoming counterproductive. They can't go back because that risks causing market instability, and where they are is uncomfortable. So I really do feel for central banks. Okay, I'm sure he does. I'm sure most people wouldn't and would argue for quite a drastic change to the economic system. While he was firmly against central banks cutting any further, he conceded it is very difficult for them to remain on the sidelines and not do something as growth in all major economies drags. It's like going to a doctor. The doctor will try and help you even if they don't have the right medication. They will at least buy you time with painkillers, etc., he said. So, from this statement that he's made, could we argue that the economy is going to go through palliative care? Is that what he's saying? Is that what the central banks are doing? As it slowly comes to the end, is this the palliative care, the painkillers and the morphine that's slowly ranked up and put up until you blissfully pass away? Let me know what you think, guys, in the comments. Bullet coffee in the morning, everyone. That's the way to go. If you don't know what bullet coffee is, straight black coffee with butter. I think that's what central banks have been doing for a while. But fundamentally, the assumption was a handoff and they would be able to hand off to a more comprehensive policy response, and unfortunately that hasn't happened. Ultra low rates benefit the wealthy. Dr. El-Erian noted that central banks, such as the Reserve Bank, cannot do anything about economic imperatives such as boosting productivity, building infrastructure, and upskilling workers. Rather, they can only lift asset prices in the hope that the people who own those assets, such as stocks and real estate, will feel wealthier and open up their wallets. So this is an interesting point, and this really shows us why everything in Australia, because 57% of our wealth is tied into housing. Okay, 57% of wealth of Australia is tied into housing. Why they want to push that bubble, why they want to drive it higher, because it's one of the few ways that people hope to stimulate the economy. He argued that government's excessive and prolonged reliance on central banks has to stop, but told the business that is not happening. The only thing that has worked is a boost to asset prices. Who owns the assets? The rich, the better off. So unironically, one of the side effects has been to worsen wealth inequality at a time when the trifecta of inequality of wealth, inequality of income, and most importantly, inequality of opportunity has become a real economic, social, and political issue. Central bank lenders have repeatedly raised concerns that the effectiveness of monetary policy is reaching its limits. Reserve Bank Governor Philip Lowe has increasingly raised concerns about the negative effects of low rates, and his sentiments were echoed this week by US Federal Reserve Chair Jerome Powell. Dr. El-Erian said time is running out and the global economy is coming to a dangerous T-junction, where one road sees governments stepping in with stimulus and other lending leads to recession. If the handoff from central banks to politicians doesn't happen, then it is recession, financial instability, and an even more complicated political setup. That is where we're heading, he warned. We're getting closer and closer, and the longer the policy handoff is delayed, the more the probabilities shift in favor of the bad outcome. I have it at 60-40 chance. 60% will end up with the bad outcome, 40% we end up with the good outcome. He does not put the chance of a major economic and market fallout any higher, because for now he believes that politicians will start to listen to the pleading from central banks. Well, there is a concern with regards to the false window fallacy, and I will link to that video down below, just writing here. So, high risks of trade wars forcing US-China choice for Australia. Okay, Dr. El-Erian marveled at Australia's record of 28 years without recession, but said this nation is not thinking enough about the significant risk that the unpredictable trade war between the US and China poses. If the trade tensions continue, if the recent de-escalation that we have seen prove to just be a short-term truce, there is a very high risk that things get so tense between China and the US that Australia may face a binary choice. Do you want to continue to do business with China because it's your main market, or do you want to continue the very special security arrangements with the United States? Dr. El-Erian cited the recent example of the US threatening to cut ties with German companies if they continue to do business in Iran. Just think about that, guys. Think about that. What do you think would be better for Australia? Let me know your opinion in the comments, because it's a double-edged sword. Let's just have a look here. Okay, from the Observatory of Economic Complexity, look at our exports to China, guys. You can see here, this is the origin of our imports, but if we go up a little bit, we can see that the exports are predominantly heading to China, 35% of our market, 10 times the size of the US, while the US is a major investor in Australia. Australia does depend on certain export types, but also on China, which is your major market. And China is having to deal with a completely different situation where it can no longer rely on the global economy to facilitate internal reforms, he observed. For China, the global economy has gone from being a tailwind, which opens up markets and enhances productivity, to a significant headwind, and the jury is out on as to how they will manage that. FOMO, not facts, are pushing the market higher. Well, I think we're seeing that here in the Australian housing market. Is that why we're getting this increase in the last few months? Is it FOMO? I get the feeling it is. The doctor is also concerned that share markets are currently overvalued globally. More than 50% chance that we get a significant repricing, he warns. Just how deep that repricing or plunge will be, he said it is hard to tell, given that every time the market has dipped recently, investors see it as a signal to buy because they know central banks will prop them up again. He said FOMO, the fear of missing out, is also a factor. But if central banks are increasingly perceived as ineffective or worse as counterproductive, I think that conditioning of investors changes, the doctor said. I don't think, unless we see a major policy mistake, it is going to happen in the next few months, but take me out 2 years and I worry. So it is somewhere in there. Okay, and they've got the two-part interview on the business on ABC iView. I'll have to have a look at that. Guys, what do you think? What do you think? So he grew PIMCO assets to $2 trillion. He told the business that beyond a certain point, ultra-low interest rates distort well-functioning economies and markets. Says the US-China trade war could be a significant risk to Australia's economy. I don't think he's saying anything that most of the people watching here wouldn't agree with. Let me know your opinions in the comments below. Like, share and subscribe. Please share the channel and the content so more people can hear about these videos and what we're discussing. If you like what I'm producing and want to help me produce more, I have a Patreon and Subscribestar where you can make a small monthly donation. I also have Amazon and eBay affiliate links where I receive a commission when you make a purchase and it doesn't cost you anything. Finally, I do have PayPal and crypto wallets if you want to make donations. Take care, guys. Have a great day, and I will talk to you later. Bye for now.